You're moving to Germany and you have a foreign income. So, how do you have to declare this to the German tax office? Let's talk about this topic and welcome back to another video here on GTax. My name is Roland Elias and I'm a German tax advisor, and today I'm going to talk with you about the declaring foreign income in Germany, for example, overseas earnings or something else. But the biggest question: who must declare foreign income in Germany? For example, all the people who are living in Germany and have incomes from abroad have to declare them in Germany. Because in Germany, German tax residents are taxed on their so-called world income. That means if you're living in Germany, have, for example, a property where you stay all the year, then you have to declare all your worldwide income. This applies also to expats who are living in Germany for more than 183 days per year. That means 183 days per year. That means you're longer in Germany than you are abroad. This includes all types of income. This means salaries as a workers, freelancers, retirees, and property owners abroad. That means, for example, you have a property in the USA or in the UK or in Australia or something like this, then you have to declare these incomes in some cases in Germany, because there are so-called double income treaties we will talk about later on. This is also has to be declared in some cases if they are declared and taxed abroad, because of the so-called double income treaties, they have some specialties. But there are some differences. For example, your types of foreign income which you have to report are, for example, employment income from jobs abroad, remote work, or past employees have to declare it in Germany. Rental income, normally located in the country where the property lays, there it has to be taxed, but there are some specialties where it can say, okay, you can deduct the tax from your German tax, or it's completely tax-free. There are some specialties. Investment incomes, for example, like dividends, interest, capital gains from foreign accounts or something, have to be declared in Germany. There have been no other chance to tax it, because then you're under the German so-called Kapitalertragssteuer, capital gain tax. Next case, you have foreign pensions, private and public retirement schemes. They are also already very important. And, for example, freelancers or business incomes, which are, for example, earned abroad, have to declare it in Germany. The big question is how to declare foreign income on your German tax return. This is normally with the so-called Anlage AUS. It's for foreign income annex. For example, that has to be declared in your tax return. You have also always to report your gross income, country of origin, and taxes already paid. That means you have to declare all the information to the German tax office. In the next case, you have to declare official proof of payment or income statements, for example, that you paid the taxes, because you can't just say, hey, I paid 100,000 taxes or euros or dollars abroad, and yeah, that's okay, just keep the change. For example, that's not possible. You have to declare, you have to official proof of payment that you have paid these taxes. There are, as I told you, avoiding double taxation with tax treaties. These are the so-called double taxation agreements or double income agreements or double income treaties, depends on whom you ask. These so-called German DTAs are existing for over 90 countries in the world. That means there are, for example, Poland, Austria, or UK or USA are allowed to tax the income, but you have to, for example, declare it also in Germany, or you don't have to declare it in Germany. Because there's something like a tax progression. It's Germany, it's called a cold progression, where you know, okay, yeah, it's like a shadow calculation where it's included in your tax rate, but not in the taxable income. So these treaties defines which country has primary taxing rights over specific income types. For example, Germany may offer a tax exemption or foreign tax credits or something like this, but these DTAs include also so-called tiebreaker two rules, which mean, okay, determining here the so-called tax residency. So you should already also check the tax agreement with the double tax agreement with your home state or where the income is coming from. The common mistakes are, for example, forgetting to report foreign bank interest or dividends, or to capital gains or something like this. Assuming, for example, the income is taxed abroad, it doesn't have to be declared in Germany. That's the second failure. Or, for example, not converting currencies or using incorrect exchange rates. That's also a problem. But for example, also missing deductions or not claiming foreign tax paid correctly. That means, for example, there are some tax-free specialties. And for example, the most important thing is keep all the documents, statements, and receipts in case of an audit. Because on the so-called risk management system of the local tax office in Germany, they already check all kinds of foreign incomes where it says, okay, we have to check this, and then the next case is, for example, you get a big over problem. So, do you have any more questions? Then keep it up in the comments below, and I wish you a very good day.